All right, well, it took a year, but the Dow finally made it back up over 10,000. The question, though, now what? Will stocks extend this rally or retreat once again? For answers to those questions, let's ask Barton Biggs, the former chief global strategist at Morgan Stanley, now managing partner of Traxis Partners LP, a global macro hedge fund based here in New York. Barton, thanks for coming on. You know, Carol and I had you on a lot over this year, and you've pretty much called the rally all the way up. But how far can we go from here? I mean, it's been quite a run, finally at over 10,000 on the Dow, the S&P almost 1,100.
Well, I'm suffering from a slight case of acrophobia, but I still think we're going higher, and we've looked at. We've looked at that the big secular bear markets of the last 100 years, and by bear markets, secular bear markets, I mean declines of more than 40%, 19 of them. The average decline was 56%. The decline this time was 57% in the S&P and the Dow, and depending on the average, the S&P is back up about 56, 57%. The Dow is up more like, I think it's 51 or 52, and the average bounce on those 19 secular bear markets has been 72%, but. 72% within a broad range, as high as 90% and as low as 40%. I really commend the work that Toon Drasma of Morgan Stanley in Europe did on this. And what it comes down to is that where we are, compared to the average, we still got another 10 or 15% to go, but compared to the average, we've got this first bounce significantly faster than the average bounce of those 19 bear markets. So looking at history, I think that I feel that we still got further to go, and God knows it was sure scary. And I think, and I wasn't around for all 19 of them, obviously. Although some people might think I was, but in any case, but I can't imagine that many of them were any scarier than this one. So I still feel we're in the bounce.
Barton, I wasn't around for a lot of them, but I agree with you. This one certainly felt scary. You talk about history and kind of looking at historically what we've seen in the past, but history also says that September is typically the worst month for stocks. We had a spectacular rally. So I guess my point is, could things be different this time around, and that things are really getting way ahead of themselves?
Hey, look, look, first of all, I don't believe any of this monthly stuff. I think that's just people's stretching for animal tracks and the moon. So I don't care about September, and I don't care. October's usually been a bad month. That doesn't prove anything. No, look, sure, we could be ahead of ourselves, but I'm heartened by the way the global economy is recovering, and the way PMIs, housing, all kinds of things are turning, and then there's a chance that we're, after being in an incredible vicious circle, we're now into a virtuous circle that's going to last for a while, and we're going to get right ups rather than right downs. And as the old saying goes, it takes courage to be a pig, and so I still feel like wallowing around and being a pig.
Let me ask you, though, you said back in August, just because we made the bottom of a secular bear market doesn't mean we're in a new bull market. Have you since changed your tune on that? Do you think we're at the beginning of a bull market here?
No, I'd be hard-pressed to say, a new secular, look, we've had a bull market. We've had a cyclical bull market for the last 6-7 months, no question about that. But are we in a secular bull market where we're going to new highs above 1550 on the S&P in the near future? I'd be hard pressed to make that case. Although, if pressed, I could make that case based on history.
Well, hey, all right. I was going to say make the case, but it's just what we've seen in history, and that kind of supports what's going on here in terms of making it a secular bull market.
No, yeah. I mean, history is what we've been through. It's only been 2 times in American financial history that it's been this bad, and really, I guess you could say 3 times if you count the 1970s, where stocks have had have lost purchasing power for 20 years, and from the 2000 highs of the previous secular bull market, we're down in terms of purchasing power of equities, roughly 40%. And that's only happened, as I say, 3 times before.
All right, hang on.
And after every one of those 3 times, we've had a huge move.